Welcome to the IJ Interview, Infrastructure Journal's video podcast series with innovators and leaders in the world of funding and financing global infrastructure. Today I'm joined by Kelvin Walker, the Global Head of Project Finance at Baker McKenzie, a leading global law firm with a long history of supporting energy and infrastructure investment around the world. We've invited Kelvin in today to discuss a special report that Baker McKenzie produced with Infrastructure Journal on the rise of export credit and development finance in major projects. Kelvin, welcome to the podcast.
Morning, John.
First question, the report is called Power Shift. To what extent has there been a shift from commercial project finance banks to DFIs and ECAs in financing global energy and infrastructure? And what did you see in IJ's data to support what the firm was seeing in the wider market?
Well, there has been a fundamental shift towards ECA and development bank financing in the project finance market, really a necessary consequence of the constraints that the commercial banks have been under post-financial crisis. And I think the IJ data shows clearly that certainly in terms of the ECAs, there's been a threefold increase in the loan volumes post-financial crisis. So going from around the $10 billion level in 2008 to now over $30 billion in the year to date. So it is a substantial shift. The DFIs have been more constant, but they still are maintaining a fairly high 25% level overall of participation in the loans.
DFIs and ECAs can be very different in their individual approaches to funding infrastructure. What are some of the factors market participants should be aware of before inviting them into a deal?
Well, from the point of view of the DFIs, they're government owned and they are looking to impress a development agenda. Whereas the ECAs are very much more export driven, so they're looking to drive up the exports of flagship companies of the particular country of the host ECA. So it's slightly different incentives, and the commercial banks on the other hand, they're looking more of a pure commercial return. In terms of dealing with the ECAs and the DFIs, I think as a result of the government ownership and those particular drivers, the participants need to be aware that they're more policy driven, and therefore the processes can be longer, sometimes more complex, and they need to be aware of wider factors. So for example, on the environmental side, there'll be particular sensitivity on environmental due diligence, although of course that's an important factor for commercial banks. There'll also be certain constraints in terms of being able to draw down funds in terms of an ECA, because there might be local content requirements. So there are policy factors that participants need to take into consideration.
Liquidity in commercial project finance is improving and some banks are coming back to the market. How will that impact the trends identified in this report?
Well, I think it's clearly a good thing for the market that commercial banks are coming back into play. I say coming back into play, they were always there, but I think that what was happening was that the ECAs and DFIs were filling a funding gap which was missing during the difficult years post-2008. But now I think the commercial banks, they'll start to be a stronger balance. I think it'll be more healthy because I think there will be competition in pricing, and hopefully they'll be able to get back up, increase tenor, although I don't think we'll go back to the tenors of the heady years.
In ECA and DFI support, how are they going to interact with them?
Well, I think obviously the ECAs have the capacity already to put out a longer tenor. They max up to 18 years. The DFIs go even longer. So I think in terms of the deals, when you've got a combination of the different funding sources, you'll push out the average tenor and increase the commercial attractiveness of those projects.
IJ's data shows that average pricing has leveled off and that tenor continues to get shorter and shorter for project finance deals. Do you see this trend reversing, and is there anything DFIs and ECAs can do to help?
I think that the data showed that in the EMEA market, at least, that the tenors were more down to around the 10-12 year mark, and as I already mentioned, the typical, the maximum ECA tenor is 18 years. I think that the reduction in tenors is probably going to level off now. Certainly for project finance, you really do need that 10-year plus tenor. I think that what's going to happen now is that as commercial banks come back in, it may push back up a bit, but I think that the constraints that commercial banks are under in terms of their cost of capital is probably going to restrict any reversing trend.
We interviewed nearly 30 contacts from many of the world's leading project finance banks, DFIs and ECAs. Did anything turn up in this report that really surprised you? Was there anything unexpected?
Well, clearly there's quite a lot in the report that was not such a great surprise in terms of the difficulties that commercial banks have had post-financial crisis. But I think that what is interesting is the fact that the data demonstrates this in such stark relief. I think in terms of surprising areas, I think it's the fact, for me, the African market and the fact of so many DFIs active there, so many different development financial institutions, and the sheer potential in that market, because the levels of investment in that market are so small compared to the project investment to date in the wider EMEA market. So for me, the surprising factor is the vast potential in the African market.
Do you think the perceptions about investing in Africa have changed at all?
Well, I think they are changing, slowly but surely. It's still a very difficult market. The investment flows are still relatively small into Africa, and of course the credit ratings of the countries in the African market is still relatively weak, and I think that will be a holding factor for banks looking to invest there. But I think that the commercial banks are definitely looking more seriously at the African market, and I think that whilst the DFIs can club together, they will be able to raise big enough tickets alongside commercial bank and also local bank participation to get the all-important larger infrastructure projects away.
Once again, the report is called Power Shift, the rise of export credit development finance in major projects, and it will be available soon for download and in a hard copy form. Kelvin, thank you very much for your time today.
It's a pleasure, John.
And it's a great pleasure to have worked with Baker McKenzie on this project, and hopefully it'll be very insightful for our audience. And to our viewers, thank you once again for watching, and keep an eye out for further IJ video podcasts in the months ahead.